Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, we will look at the local stock market and its performance at the completion of the first quarter to 31st March, and what can we expect going forward generally. We have a few graphs and I hope that we'll be able to complete this in the time permitted. Last week, we had the announcement of a downgrade in the rating of Trinidad and Tobago from A- to BBB+. Generally, what this means is that there will be an increase in the cost of the borrowing for the nation in the international markets. And so that's one factor that plays in as interest rates go up. It also impacts equity generally on the inverse. That is, interest rates go up and it has a downward and a dampening effect on equities. So let's look at what has happened over the past week or so, or let's say in terms of what we have been able to put together for the last quarter, or the first quarter, I should say, in 2017. This green line here looks at what we call cross-listed stock. And you can see that cross-listed stock from the beginning of the year to the end of the first quarter are up 12.5%. The blue line looks at what all stock listed on the Trinidad and Tobago market. And therefore, that blue line is saying that when we take the weighted average of everything, cross-listed, that are stock from outside of Trinidad and Tobago, as well as local stock, the market is up just by 2%. And Trinidad and Tobago domiciled issues, that is, all stock out of Trinidad and Tobago only, as you can see, down 1.2% in the red line. What it means is that the Trinidad and Tobago equities are not performing as well as some of the other equities that are listed on the Trinidad and Tobago market. So that while the average or the weighted average of all stock is 2%, Trinidad and Tobago stock down, whereas regional stock outside of Trinidad and Tobago but listed here up. Let's look again and see how that is broken down into the various components of the listings on the Trinidad and Tobago market. What can you see? You see in the green area establishes what are the stocks that have shown improvement in value, that is the price per share, from the beginning of the year to the end of the first quarter. Highest on the list is JMMB, a Jamaican issued stock. Then Guardian, up 26%, which is the only locally domiciled stock that is in this list, this green list. National Commercial Bank, NCBJ, which you know previously, now the NCB Financial Group. Scotia Investment, again a Jamaican stock, and Sagicor Financial, which is now domiciled in Bermuda, but is generally seen as a Barbados stock because of its component in Barbados and Jamaica and Trinidad. On the red side, what you see, Unilever. Then you see a number of other players on the red side, that all of which I would say are local stock. So this is what is happening when you look at the market generally. Let's look at some of the components of what's happening. And here you can see in the banking sector, while we have reasonably good growth in terms of earnings per share, what we are seeing is in terms of price movement that both Republic as well as First are going down in price when you look at the red lines, the red column to your extreme right as you will be looking at it. So generally, even though there is good movement in terms of earnings, it is not reflected so much in pricing. As I said, banking sector, First Citizens, and then Republic. We go to the next slide. And this is in the manufacturing sector. And again, you see in terms of earnings or growth in earnings, you see a lot of red in this line, in this column. And this is the second from right column. You see the earnings growth is in negative territory. TCL down 91% quarter on quarter. Unilever down 4.7%. and then Angostura down 26%. And of course, this is reflected in the extreme right, your first quarter price movement, where you see in terms of Unilever and TCL what has been happening going down in those areas. That's the manufacturing sector. Let's look again to the next sector that we have. Well, you can look at that on our website, www.bourseinvestment.com, and you can get better information. Let's talk about what are the key market drivers, what is pushing the market. You may have seen this particular slide before. Higher corporation tax is a negative for the market. Then, of course, lower consumer spending and confidence. Again, that is a downward pressure on stock price. I think upward is that you are going to see in the year ahead increases in the production of gas volume-wise, and let's see how that impacts the economy, because oil and gas are the main drivers of the economy, gas more so than oil. Weaknesses in terms of the currency, and that's very important because that is also having a significant impact in terms of confidence in the sector. These are things that are key drivers for the economy. What can we look for otherwise? Well, what can you do and how do we pick? Look for stock with lower P multiples in the main, higher dividends, lower dividend payout ratios, and in particular those stocks that have a lower economic exposure to Trinidad and Tobago, because as the Trinidad and Tobago economy drifts downwards, it is going to impact corporate earnings and therefore share price. Also, in your portfolio, look for US dollar revenue generating stock. Not fully, but partially. That's why we have always had a strong recommendation for TTNGL. These are some of the things that we put to you. Look for us on the newspapers for our various mutual funds and their performance under the rubric of Save Invest, as well as Bourse. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.